Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. I've got my AMC popcorn just off camera here. It's delicious and it was free. That's what we're going to talk about today, pretty much. AMC, I guess, doing what they're supposed to do. They're doing another offering this morning. It's interesting that that headline came out, dropped AMC, also dropped the rest of the high-flying stocks from yesterday, though they have since bounced. Some of them, at least, have since bounced back. We'll talk about this. Implications for the overall market, because we are down this morning, Joel. Correct?
Oh, yeah. Yep, we are. You going to preview the rest of the show?
Yes. Okay. We'll get to you in a second.
I'm trying to get. I'm busy here. I'm busy. I'm in a fast market. Come on.
Sorry. Paul Monica is our guest today. He will join the show at 8:15. He's a digital correspondent at CNN Business, going to help us try to make sense of all of this. Don't forget, everyone. After pre-market prep ends today at 9, we're going straight to the Cannabis Capital Conference right here on YouTube. You can learn more by going to bzcannabis.com or just stay on the stream. It'll redirect straight to our conference. But that's going all day today and tomorrow, 9 a.m. to around 5:30 or so. Also, don't forget, we are still giving away a free share of Tesla when we cross that 100,000 subscriber mark. You can find the information to do that in the description, or you can click on the link that I'm about to paste in chat right now. YouTube code SLIMERAZ. Enter to win a free share of Tesla. Joel, how down is down this morning?
Down is down, and Triple D with the call of the century. When Triple D tells me to buy puts, I go immediately to the account and I buy puts. We are trading down. Let me share my screen here. We are trading down 35 handles on the lows of the session, 41.71. We continue to make new lows here. Boom, boom. took out the weekly low. My target right here is my target, 69.50, but doesn't look like that's going to hold up. Last week's low down to 42.25. Crude down 20 cents at 68.63. Gold getting shellacked down 16.20 at 18.93.80. Silver down 36 cents at 27.85. Bitcoin, what a trading range, 35 to 40K, 9 days in a row, up 670 at 38,710. Ethereum, that's up about $20 at 27.93. Before Triple D, before you come on, I know the cannabis conference is coming on at 9, but when you guys are talking about pot, I'm going to be doing an extended ticker time on PreMarketPrep.com. Rob Friesen joining me at 9:20 and 9:25. So get over there. I want to see everybody coming over from there at 9 a.m. Triple D, I don't know if I even need to talk for the rest of the show, man. You are wound up.
I'm tired, though. I'm actually tired today trading. I actually got my Pfizer shot yesterday, so the arm is hurting, like you said.
I told
Joel.
you it would. I told you it would.
Hurting. I was a little bit. I got at 1 o'clock in the afternoon, and then I was flying, trading. And about 7 o'clock at night, I started feeling a little bit hot, and I was feeling a little bit. I woke up. I feel fine, but the arm is sore. The arm is sore. So, anyways, I got my first vaccine. So we're getting there in Ontario. We're gonna get open here eventually, which is exciting news. But what is more exciting is, wow. It was fireworks yesterday in all the meme stocks. AMC, I don't even know what to say. I mean, I've said when, two things. One, never short a rocket ship. Two, when price is disconnected from fundamentals, it can go anywhere. I don't think anybody saw this thing going to $72 yesterday and going up more than 100% again. So to predict the next movement on AMC is nearly impossible. I tend to think it's not over. But they definitely, they announced an offering here this morning. Well, Spencer, tell us what they announced, and this is what has put the stock down a little bit from where it was trading pre-market.
Essentially, their second offering in a week, right? And this morning, it's an 11.55 million share offering of Class A common through B. Riley and Citi. So I guess doing what you're supposed to do, right?
Yeah.
That's the good corporate governance. Like, they're raising money to theoretically shore up the balance sheet and reduce leverage when the market gives them the chance to, which is fine. There's nothing wrong with that.
No, I think it's smart, and I think they obviously cover themselves too. There was some disclaimers in there saying that, it's high risk, don't put any money in here you can't afford to lose, because they know they're putting an offering out there into a situation where a stock is, ridiculously overinflated. So they don't want to be looked back and say, oh, yeah, they sold to the suckers at the top. So they're covering their ass with all the disclaimers they have on this as well. The question is, does it matter? We've seen offerings with AMC before. They've knocked the stock down, and the stock comes right back. I mean, it is disconnected from fundamentals. Price can go anywhere here. So you got to look at it and say, is this going to be another situation where they're just going to buy it back up? Is the frenzy continue? Or is it over? I mean, it's impossible to say if it's over or not yet. Some people are calling it. I know you in the pre-market, Joel, think it's over. I tend to think it's not over, but I don't know. Nobody really knows here.
I mean, you talk about overhead supply now, $59. Where did it get to this morning? I mean, this is. I think
it was over 70.
It was over 70. It got to $76
in the pre-market. So 20 points off the high.
77.30. So right now, sellers are stacked up at 65 on the 15-minute chart. Pre-market low comes in at 52.81. I'm tempted to do my levels on it, but I don't want to be tempted to trade it. So I'll just give you 65 looks like resistance now. And if you take out this low at 52.81, let's go to yesterday's range. The next number, the only true number you have. Oh my gosh. Yesterday, or the 2-day, 62.55 is a good number there, right? To get it green. So first things first, but 32.04 was the 2-day close. So you're better at stuff like that than I am. I'm just glad I've stayed away from it. And a lot of people made a fortune in this thing. I've saved a fortune because I haven't traded it on either side of the market. I haven't traded it long. And I'd be very tempted to trade it.
Hard to trade. So, it's a hard thing to trade. What wasn't hard to trade yesterday was the
BB.
sympathy moves.
Yeah.
And you could see after the Bed Bath & Beyond explosion early morning, I'm like, I'm going after the high short names. So I went and bought a whole pile of swing trade longs. This is around noon is when I actually, came and started looking at all these shorted names, the highly shorted names. And I'm like, you know what? If Bed Bath & Beyond, if they're going to explode that $10, I think they start picking on all the other beat up shorted names too. So I went to that list, that list that we were looking at back in January, the highshortinterest.com. And I went and bought a whole pile of stocks on that list. I have sold some of them already. I'm still in some of these trades, but the entire list pretty much exploded yesterday. Anything with a higher short interest was, like, say, over 20%, even if it wasn't on that list. If it had a higher short interest, it was catching a bid. People were going and attacking highly shorted stocks once again, just like they did in January. So that was one thing that I did. I went and bought a bunch of these highly shorted stocks, not meme stocks, but the ones that were highly shorted. And the second thing I did was turned around and hedged myself by buying SPY puts, because I thought that potentially what we saw in January, and Ryan Dietrich always says, history doesn't repeat itself, but it often rhymes. Back in January, we had the short squeeze on all these names. They started to roll over the overall market. And there was a number of reasons for that. They were worried that hedge funds were blowing up and they were going to have to sell. They were worried that money was coming out of, like mega caps to put into these highly speculative names. I think all those worries are there today as well. So I bought a bunch of SPY puts. I also bought puts on Apple. Did
you check my message? Because after you hung up, did you see what I said to you in the message? Because you said you were going to do the June calls, and the only thing the June puts.
Maybe it didn't go out far enough. I only went out 9 days. I didn't go out far.
You know what? I learned my lesson.
More.
I learned I know, and you're getting immediately rewarded. But you know what? After the February put debacle of 2020, I said, you know what? I'm going to pay up, and I went out to July because I don't want to, because their premiums they'll just zap. I mean, those puts will be good money, but then you have a 15, 20-point rally in the SPOOs today, which is inevitable, right? We always bounce. Then they just suck the premium out of them.
They do.
And then when it goes back to where it originally was, you're like, oh boy, my option is I can't sell it for nearly the price was. So
it's exceptionally hard to make money buying options. There's rare times where I will buy puts. Obviously, we know I bought a pile back in February of 2020 because I was worried. Here, I just thought it was speculative put bets, really. Short-term hedging, just in case they decide to start hammering the market. Because here's my thought process, and I believe there's a lot of money managers thinking the same thing. When you see stocks just start exploding like Bed Bath & Beyond, AMC, and there was a number of names up 80 to 100% yesterday, you start thinking, well, this is all just a game. This is all just disconnected from reality. And maybe I don't want to play that game. Maybe, this is a house of cards that is ready to, collapse. And maybe I'm going to, sell some of my stocks. I think there's that thought process. I think there's also the thought process that I'm not going to sit around in Apple and Amazon and Microsoft and Google and all these S&P names and try to make 10% a year when I can make 10% in 10 minutes trading these meme stocks. So I think you could potentially see money flying out of those stocks just because there's people who are very, that maybe were holding these stocks saying, hey, my neighbor, I had a message, my neighbor just made $50,000 in AMC. I'm selling my Apple and Amazon. I'm going to go buy AMC, or I'm going to buy some of these other names. I think that could be a short-term effect. I don't think this is long-term, but this is why I thought yesterday that the S&Ps might roll over. This is why I do believe this morning that we're actually seeing an S&P rollover. I mean, we do obviously, have lots of other information out there, and we can put it to anything. But I think there was a call here that we could see some short-term weakness in the market, just like we saw in January. We saw a 4.5% fall in the SPY back in January, and I was thinking the same thing. Maybe we see a quick 2, 3, 4% dip. And if I can load up on some SPY puts, one, I can hedge myself for my portfolio, but two, also make some money on the fall. So. And the premiums were low, relatively low. I bought the 419 SPY puts. I think I paid $2.48 or something.
Yeah,
for
now
them,
they're
going
in the
out 9
money.
days.
Yeah.
Yeah, and they're already it's almost at that. But I mean, they might bounce right back, you know. So again, this is a short-term bet. Maybe if AMC starts to sell off, I think I take off the hedge. But if AMC
You still
starts
think it's
ripping
going to
again,
100 today? You still think it's going to 100?
I don't know where AMC is going to go.
Okay.
I think the biggest thing is I'm going to go back to nobody knows anything here. So when nobody knows, and there's so much, you know, ridiculous action happening in certain specific stocks, can it spill over to the overall market? It's not going to spill over on the upside, I'll tell you that much, because nobody's flying into Amazon because they think it's going up, you know,
Apple,
80%.
Microsoft,
So
Google.
I think the only path for those stocks, you know, in the short term was lower, at least yesterday. Now you get a little dip. If AMC starts to sell off, I do believe the money maybe rolls back into those names. But we saw the short-term phenomenon last about a week. So that's why I only went out 9 days. I don't think this is a long thing where, you know, we're going to see an imminent, you know, crash here in the market. I'm not predicting that at all. I'm just saying I think you can see some short-term weakness here, and obviously I'm trying to profit from it.
We were in a trading range, right? And what happens with trading ranges? Trading ranges get resolved, right? One way or another. And we were just chopping from 41.90, and then we had that pop to 42.30, just, you know, and everyone's like, okay, we're going to all-time highs. And the big money came in and they sold that hard. And that was on Tuesday. Tried to get back up there Wednesday. But you know how I came up with Pump and Powell? How about, is this the popcorn top in the market?
Ha.
You know, what do you guys think of that one? I know it's not as good as Pump and Powell, but the popcorn
that's not bad. That's not bad.
Popcorn top.
I mean, the question is, does it really continue to spill over into the overall market? I think if AMC went to 100, I'm just saying scenario analysis. If it did, I think the S&P's tank. I think the market just says, look, this is all just stupid. I'm booking some gains because, one, it's not like the S&Ps are cheap right now. You know, like you're looking at some of these, you know, trading 25, 30 times, you know, 25 or 24. It's not cheap. So, you know, maybe we're, you know, due for a correction, and maybe this is something that can get a kick started. But, you know, it's hard to say. Again, nobody knows anything. I didn't flat out short SPY. I bought some puts, and I was like, I'm willing to risk a couple bucks just to say that, hey, maybe, you know, we see some short-term weakness. Maybe I'm going to profit from that. Maybe I'm not. Maybe I should have went out further. But I think this event is now. I don't think this event is like 2 weeks from now. That's why I was more comfortable to buy short-term protection. Second, I don't have to pay the kind of premiums on that short-term protection either. So yeah. So I bought some SPY puts and I bought some Apple puts. It's pretty much
you know
all
what's
I bought.
you know what's also interesting, Dennis? What do we got the Russell rebalance coming up, right? And then we have quad witch this month too. We do. We're in
a lot of
June.
events happening.
Yeah. So
we got lots of action. Action is good.
Oh, are we running over at Paul's time here?
Well, waiting for Paul to join, so let's keep on tripping, and when Paul joins, he'll join.
So second question is, some of these short squeeze names, like I said, I've already sold. I think this is a short-term thing, like the Bed Bath & Beyond has already leaked a little bit. Do they get another lift? Maybe, but it's typically a couple days. You know, you saw the big move. I think the big money was made trading these short squeeze names yesterday. Like I said, I have already booked the profits on a lot of these names. I think I bought 22 short squeeze names yesterday. About 15 or 16 of them really went. Like they went like more than 5%. Is what I mean by really went. Some of them, I had a couple that went up a ridiculous amount. I did have Workhorse. I bought Workhorse at $9.90 yesterday, just before noon, just because it has the high short interest, and I thought it might go. I sold it after hours last night at $13.50. I know in the pre-market, I think I went almost to 15, which is a little bit overdone, but I'm completely out of the Workhorse now. I mean, I made 35% of my money in about 6 hours. So you can't go wrong with that.
That's okay. I mean,
that's okay. But I mean, that was just a call. That was a short-term call. You know, I tweeted out I thought high short interest names might, you know, catch a bid, and they did.
You're reading the tape.
So I still am in a few of these names. Some of them have went. Some of them didn't go at all. So there's been a couple that didn't go at all. But, you know, we'll see what happens. I don't think this is like going to be the thing that's going to get driven for a week and a half or 2 weeks. These are short-term trades. That's why I'm not going to go into each individual name and try and talk my stocks. I don't like talking my book. But, you know, I can tell you, you know, what I was
looking at was against it.
I was looking at that list and looking at the highly shorted names. So you can kind of go through.
Everyone else is too.
You know,
it's not like you're giving away. Yeah.
It wasn't me. Like everybody. I mean, look at the volumes on these things.
You weren't buying that much.
No, I'm not that big of a buyer to drive Workhorse up 30% in 3 hours or 4 hours.
You know who I'm rooting for on this move? Ride.
You know what? Marcus is going to get bailed out here, it looks like. I hope, Marcus, if you're listening, I hope, in this bailout here, because I still think Ride is potentially a zero. I'm not joking. I think Ride is eventually, could be. Not saying it is. I'm saying it has the potential to be that. This is a nice ride for Ride. You've had 3-4 days. I know Marcus is getting close to his break even. I hope he's going to get out of that trade. I'm worried about him. I've been worried. I don't even sleep at night sometimes worrying about Marcus on this Ride trade. So I tell you, we love you, Marcus. You relax me. I don't want you to get hurt on this trade. I'm hoping you're going to get out in this move, because this is going to talk to everybody out there. If you're in a stock that you've been a bag holder in for the last 3 months and it all of a sudden just got a 50% lift in 2 days because of a short squeeze, you book the profits. FUBO, I sold it. You got to start booking the profits here now. FUBO has basically doubled since its low, $14 to $28. It's doubled in a week and a half. The time is not to buy FUBO right now. I believe the time is to sell FUBO. So some of these names that have had ridiculous moves, especially yesterday, I think it's the time to lighten up if you're in them, or potentially get the hell out altogether.
But if you're not in them is the question, because most people,
I would not be entering them at these prices. I would not be entering FUBO now. FUBO got a lift yesterday because of the short squeeze. I believe it's got not a super high short interest, but they were attacking anything that had over 15, 20% yesterday. So they weren't even going after 30, 40%ers. They were going after like 10, 15, 20%ers too. So it got a huge lift. There's no there's no, of course it's from the short squeeze yesterday. All these stocks did the same thing. They were all oversold to a certain extent. And this was the upside capitulation event where you sell into. When you get that upside capitulation where, stocks drift up, then boom, it gets the big candle. I typically take my profits in there. Again, I often sell too soon. Is there more money to be had in some of these names? Maybe. But I think when we look at FUBO 6 months from now, I think it's lower. So I think when we look at a lot of these names that have, had ridiculous rallies, I think they're lower. Is there more gas in the tank? There very well might be. You are selling a rocket ship. I don't short rocket ships, but I do sell them if I own them. So I don't know where FUBO ends, but it's down $1.50 here today. I tend to think that was a selling opportunity yesterday. I don't think it's going back to 50.
All right. ADP numbers were really good. We have the jobs number tomorrow.
Little boost there.
Can we get a lunch bet today on AMC?
I'm feeling like a lunch bet here.
Can we get a lunch bet?
I don't think it's done, but I mean, all rational thought says that they can pull the rug out from under this. This thing could be $30. They could also run this thing to 100. It could really go anywhere. I mean, and that's why I'm using this. I'm not trading AMC whatsoever. I'm using it as an indicator to trade all those other short squeeze names. Because if AMC really rolls over and loses $20 today, all those short squeeze names are going to get hit. I mean, they were all trading up earlier this morning when AMC was up. Before AMC did the offering, it didn't just hurt AMC. It hurt all those short squeeze names. I mean, where's Workhorse? Bring up the chart for Workhorse pre-market. I think this thing hit over $15 this morning.
It did.
Yeah, I think I did.
Which is incredible. I sold way sooner than that. I sold last night at 13.5, but this thing got up to almost $16 this morning. That is absolutely incredible. Incredible. It's now down to 13.5. It got hit. All these stocks got hit when that AMC got hit. So bring up AMC, and it's not a coincidence that you'll see the big falls coincide. When you see that AMC all of a sudden go from 70 to 52 in one bar, bring up the AMC chart. You can see it when it did the offering, 75. Boom, it's out 70. Knocked it all the way down to like $54. That's when all these short squeeze names started to give back the majority of their pre-market gains as well. So again, I'm a relationship-based trader. I look to leadership to tell me what to do on the laggards. And AMC right now is my leader. That's going to tell me what to do with all of these other stocks that, are short squeeze candidates that moved yesterday off of the AMC rally.
All right, if you want to do, I'm just gonna pick a number out of thin air here, Dennis, and then you can go over or under. Okay. Okay. And then we'll just do a lunch bet, even though I don't know if I'm never gonna see you again. Yeah.
Well, it's going to be 58, Joel. I'm not going to give you an equal lunch bet if you bet like 65. I'm going to take the current price.
You're going to take the current price.
I honestly think you got almost give me odds because the things went up so much. It just did an offering.
Yeah, they just did enough.
I tend to think it's got a little more gas in the tank, but I don't know when they pull the rug. Nobody knows. This is just completely guessing. We're going to the
I'll pick a
wheel,
number
and
and
we'll
you
put
pick
it on
a
red
number.
if you're
I
really.
think it's going to close. And you just pick a number. I'll pick a number, and then, well, whatever.
I honestly
$60. $60.
I don't even have
60.
like I don't think we're
I
gonna
don't
get a
even
lunch bet because I don't even know.
Yeah, okay.
It was bouncing back right away from that offering about 25 minutes ago, and I was like, oh, and it went to green. I was like, is this thing gonna just keep going? And then I was like saying, it's gonna hit $100. I don't think it's gonna do that. I don't think it's. I think eventually it's gonna be a hell of a lot lower. So it's hard for me to make a bullish bet even on lunch when a stock that I'm like concerned about. But you know what? It's not out of the realm of possibilities. Don't kid yourself. This stock can do anything, and it's not out of the realm of possibilities that this thing could close green again. So I'm just going to use it as my indicator.
62.55 was the close. So just keep an eye on that if you're playing it from the long side
Important
here.
Number.
Yeah, 62.55. That was the close from yesterday. That is what, you got after you went down under 55, you got a couple bounces. 62.55 looked like a bad sell a little bit on this bracket, a little bit on this bracket. But now, a lot of people, I should have sold at 62.55. So I don't know. Trade your short-term charts, whatever you use to make money in these things. But the close is the close. And that's what got like the GameStop. That's where I wanted out on a close, and it turned out to be the high close of the move. It wasn't the high of the move by any stretch of the imagination. So the close is the close, man, and that's what you got to pay attention to. Is Paul not going to make it on today?
Paul said he got slammed on deadline and with kid stuff, so he's asking if we can move it.
Will you call Ted Turner and tell him that we want Paul on right now? I don't understand this.
Is Ted Turner still alive?
I don't even know. I just threw that name. I couldn't
Somebody
think of anybody
asking.
else.
So that's fine.
We'll talk about some other stocks.
What are you looking to buy the dip on after this? I'm not looking to buy the dip. I'm actually still in capital preservation mode, even though I went aggressive yesterday for basically day trades or overnight trades in some of these short-term stocks, and I got paid well for that trade. It was nothing more than a day or two trade on a lot of these short squeeze names. So am I looking on the dip to buy any of these stocks? Nothing is cheap. Nothing. Not a stock out there is really cheap right now. So I'm not in this, mode where I'm like, oh yeah, I want to jump in, this and look to buy this. I'm still looking to sell rips. I'm still looking, I'm still sitting with a lot of cash in my portfolio. I'm still concerned on the overall market here. So I know it feels like everybody's making money and this is the best market ever. The only people making money were trading a few of these short squeeze names yesterday in AMC. So there's, not a lot of money was made in the SPY yesterday. Not a lot of money was made in the Qs yesterday.
Yeah.
I'm not jumping in. What dip? What dip is the question?
We're still 50 points from
We're 1% off the all-time high. There's not much of a dip here. So, so it's a great question, Andrew, because people naturally just think, oh, we're down 30 S&P handles. We got to be buying the dip. You don't always have to be buying the dip. And maybe it's the case, but obviously I bought puts yesterday. So I'm betting bearish on the market right now. So, and I might be wrong. I might be wrong. But
did you see the Fed is scaling back the bond buying and the corporate bond buying? Did you see that?
Yeah,
that came out. I mean, higher interest rates are coming, right? Inflation's coming. I mean, I'm just looking for inflation hedges. I mean, that's what I'm going to be buying. And my alternative to buying the dip is not getting Lisa to buy the dip because I can't get her to sell anything. So just not buying more. Because right now I bought the AT&T. I got not slammed. I mean, it's, a small percent of one portfolio. I'm underwater in the Intel too, but these are, I have to reevaluate those investments, but you're right. There's nothing cheap. I'm just trying to find good inflation hedges, whether it's the banks or the oils or, real estate ETFs. I mean, rents are going up. I mean, housing prices are going up. people are making all this money from AMC and all these stocks, and they're going to want to be renting nice places. So there's a lot of things. Well, a lot of things on the horizon that make it costly.
What are you buying, Spencer? Are you buying something? You're young.
Wait,
He has to buy. He's young.
Wait,
Yeah.
I just wanted to say, speaking of ETFs, did you guys see the SFYF yesterday? This is actually an ETF from SoFi. SoFi is everywhere, guys. SoFi does loans. They do investing.
They must have a lot of meme stocks in there.
So AMC. So it's a basket of the most held stocks in SoFi accounts, right? And AMC, last I checked, was like more than a quarter. It had gone in one day from like 12% of the basket to like 25% of the basket. And SFYF got halted on volatility. Have you ever seen an ETF get halted for volatility because of one stock in its basket? That happened yesterday.
This is a thin one, man.
Insanity. Just insane.
Yeah. Listen.
Yeah, if it's full of AMC, I mean, it's going to trade off of AMC. So if you're trading this thing, I've never traded this one before. It's good to know, though, because maybe I'll do some ARBs. Is it thin? Yeah, it looks it's got a market. It's got a market. I would trade.
Well, now it does. It traded 85.
There's a little bit of a market.
Traded 85,000 yesterday.
Yeah.
The day before it traded 21,000. And then a few weeks ago, it traded under 10,000. So it might be picking up now with the
full AMC and the storied stock.
So there are a couple people in the chat that are not agreeing with what you're saying, which is fine. If you're up big in AMC, congratulations. The only person you have to answer to is you.
Exactly. Oh yeah.
What are they not agreeing with?
People are long and strong, and they've got diamond hands on AMC, which is fine.
Yeah, what I just said was if you are long the meme stocks and AMC, you're making money. If you're long everything else, you're not making anything right now because the market wasn't going anywhere yesterday.
Well, you also said that you wouldn't buy AMC here. If you weren't in it now, if you weren't already in it, you wouldn't buy it.
I wouldn't have bought AMC at 25. I wouldn't have bought it at 35. I'm not buying it at 45, 55, 65, 75 because it doesn't fundamentally make sense. It doesn't mean you can't trade it. It doesn't mean you can't do stuff, but it's not going in my investment portfolio because it doesn't fundamentally make sense. But you know what? It doesn't matter.
Wait,
I mean, it's if you're making money with it, good job. I mean, it's not like like I'm talking bearish, bullish. I've said I'm neutral. I don't know. Wait.
Okay, so now here they come. So Express is in this group, right? EXPR, and they had earnings this morning. The earnings release was out almost 2 hours ago, but there was just a press release out a minute ago. They announced an at-the-market equity offering.
Why not? This is what's going to happen. They're all going to do this. And believe it or not, to the newer traders out there who are just getting involved in the markets, offerings are typically not good for stocks. Why? Because you own less of the company. I know in this case of AMC, they've gobbled it up and not gave a shit, but it's not normal. It's not normal to do that. Express is down 21% because they just did an offering. So sell your peanuts while the circus is in town. The circus is in town and all these stocks. The clown show's on. The elephants are standing up there balancing balls. We've said all this stuff before. The circus is in town. And, now is the time to sell your peanuts. Now is the time to get out of some of these stocks. Jeez, I don't think Express is going to $100. I don't think AMC is going to $500. I think eventually it all ends in tears. I don't know when that is. I don't know when the rug pull is. Like I said, there was a good opportunity yesterday for short-term trades to buy some of these short squeeze names, the ones that hadn't went. Again, I'm not chasing. When I was buying Workhorse yesterday at 990, I wasn't chasing it. It had sat there. The technicals were actually looking pretty good for a breakout over 10. And then you had a catalyst because it had a high short interest, and they were picking on those names. That's the only reason I jumped into that one. And there was a number of other names I did the same thing on. But now you're chasing it up. It just ran 35% a day. Now, how do you control that risk? I've sold my Workhorse today because I feel like, okay, now I got paid. Maybe it goes to 15. Maybe it goes to 17. Maybe it goes to 25. And I often do sell too early. Everybody makes fun of me for it, and it's cool because I know that about myself. But, I mean, you've got to not just be coming in here thinking, oh, I got to get rich because my neighbor just made $50,000 in AMC. The name of the game is still discipline and have a plan. Joel, have a plan. Longevity in this industry will not just be you got a hot tip and you made money in it. Longevity in this industry is you go in with a plan and you execute that plan.
Right, that's what I was going to say. If you're long AMC, great. I hope you have a plan. If you don't, you better get one.
Here's a great question. Workhorse, JG, great question. Workhorse is just as useless as AMC. What's the difference, DDD? The big difference was Workhorse hadn't gone yet. Hadn't left the station. We were still at the train station. I talked about this 2 days ago. And we had a catalyst because all of a sudden you could see once Bed Bath & Beyond, AMC was not the catalyst. Bed Bath & Beyond was a catalyst because I'm like, okay, they're going to start rolling over into all the stocks they did in January and everything that has a high short interest. Workhorse on that sheet was right at the very top of 34%. It was a prime candidate to get squeezed yesterday. That's why I jumped in, because I thought that maybe they're going to go start picking on that. I wanted immediate gratification on that. If it wouldn't have ran yesterday, I would have cut the loss as quickly as I could. But I felt like I don't see the downside catalyst here, but I see a big time upside catalyst if they decide to squeeze this, and there was a number, like I said, I bought 22 stocks that were highly shorted yesterday. I've sold like 18 of them, or not, I haven't sold that many. I've sold like 4 or 5 of them, but I've lightened up on a lot of them already. I'm still in a few of these names. I'm all out of the Workhorse though, so I can totally freely talk about that one. That's why I'm picking on that one as an example, but there was a lot of other ones there too. I don't like to talk the ones that I'm currently in because I'm going to be selling some of these stocks today. So I don't want to talk them and then say, oh, you talked and you sold it. I don't want to talk about the other stocks at all. I'm not like everybody else on Twitter that pumps their book. I don't like talking about what I'm currently going to trade or what I'm going to be selling that day. So Workhorse, I've already sold it. 1340, it's trading up on 3.8 million shares. I think you ring the register on some of this stuff. So the difference is that Workhorse hadn't left the station. I don't like to chase. Now, if you're coming in Workhorse now, you got downside. You got, potential downside here. This thing could go back to 11 or 10. Was Workhorse, when I bought it 990 yesterday, going to go down to 8 or 7? What was the catalyst to take it there unless it just had, a random news event? Probably nothing. So short-term trade, it worked. So that's, again, the thing is I'm talking about is, knowing your risk, finding setups where I can control the risk. I can't control the risk in Workhorse here now, which is why I don't enter it at this price.
So, Tree Smoker Gaming asked, how do I make a plan? Very simple. Figure out when you're going to sell. Figure out you're out. If you're up, congratulations. How much of your profit are you willing to lose if it goes down? These are questions that only you know the answer to. Right? Dennis always knows his out when he gets into a trade. Joel always knows his out when he gets into a trade. Know you're
out. It's a contingency plan. Yeah.
Just have an idea. Okay. So like AMC, what is AMC at right now? Sorry. So AMC is at 58. So, hypothetically, I'm in from 30. All right. So I basically double my money here in AMC. How much of that am I willing to lose? Answer the question for yourself.
You know what? It's so, I want to try and get back to stocks here in a second. Yeah. This is good stuff. But I think one problem, that we have on the show is like we're talking. There's so many different time frames.
I know. It's hard.
And
sure.
And it's so like people are asking these questions, and we're trying to obviously we don't give investment advice, but what is your time frame? Are you a day trader with, 30K in your account and you're trying to make 1,000, 1,500, $2,000 a day? Then I would say don't ever lose more than 500 in a day.
Yeah.
If you're a long-term investor that's 65, 70 years old and you got a big old fat IRA and you're sitting on this money you want to retire on and leave it to your kids, well, what was your original goal? Young Spencer, you got to invest in the market. You're young. You have, the history of the market shows that it gives better returns. So it's just so hard. If you're a swing trader, like those trades, Dennis, you did in Workhorse, you did it. You swallowed. You said, okay,
I was up immediately. I took zero heat on that. I was going with the flow. You could see the money starting to flow into the short. You could see it happening. I've got scanner. I'm looking. I'm like, I can start seeing the flow of money. And Bed Bath & Beyond was the tip off. That was the tip. The market showed its hand with Bed Bath & Beyond, with the explosion you can see in Bed Bath & Beyond just after the open. Once it broke over 30 at around 11 o'clock and then 35, and then it's like, okay, now everybody's starting to talk about it. They're going to start picking on all the short squeeze names, and they did. It was a predictable outcome. And that's what I'm trying to do, is just find little edges. That was an edge because the market tipped its hand with Bed Bath & Beyond that they were probably going to go to the other short squeeze names and start to go into those names too. And the savvy traders who were buying all these things yesterday morning and yesterday early afternoon are up a lot of money in a lot of these stocks now. And I think the savvy money is probably booking some of that. So it's going to hold on and maybe they're going to keep going. But, at this point in time, it's like, I'm entering a trade and, getting 35% of your money in a day. It's hard to, for me not to take that. Maybe, it's going to go 100%, and I do sell too early, but that's my
what's
style.
interesting? Look at it both on BBBY and BlackBerry. Look how much they came up, and I'm not saying this is going to continue, but look how much they came up shy of the January high. Because that just, we talk about overhead supply. And a lot of people are buying, thinking, man, this thing's going to $60, $53. I'm hanging out for that. But then all the other people that get caught here are the savvy traders, investors that bought it in here and had, targets based on whatever, Fibonacci's, or I don't know what the dailies looked like in between there. And the same thing for BlackBerry. Well, how high did that get before? When it had to squeeze before, it almost got to 30, right? And this time, so I think that's something you gotta take note of is picking intermediate. Now the high from yesterday in these stocks is going to be important. Now the close from yesterday is going to be important because you know what? Not just retail traders, but institutions and hedge funds are dabbling in this too, and they're thinking about their mark right now, and that's why the close, it can chop and slap and kill you and stuff. But at the end of the day, the opens, which we try and stress, and the closes are very, very important. Very important prices. Besides,
and Mitch, if you're in the background, you can ask that question that you asked us in the pre-market now about the hedge funds and how much volume do you think?
Oh,
is Mitch still there? Is Mitch hiding in the background?
Yeah. Mitch is here, and then we had someone in the chat say that same thing about a half hour ago. It's like, who do you think is doing this? It can't.
It's not all retail.
Oh man, it's not retail.
Here's the problem: is you can hold and you can say hodl, and I'm going to hold AMC and it's going to go to the moon. And it might. I mean, it could go to 100, it could go to 500, go to 1,000. Completely disconnected from fundamentals. It can do anything. I said on the show when it was 35. I mean, it can go anywhere. But the problem is, you probably have the majority of AMC shareholders are professional hedge funds, professional traders, and these guys are not going to hodl. They're not going to hold on. They're going to go when the momentum starts to go the other way. They're going to go quickly the other way. You see how fast it's trading. This is all algorithmic action. It's nice to think that it's 1,000% retail action. I'm willing to bet that, and I bet you the action in the volume is probably less than 30% retail. It's probably 70% professional money. So, and they're just jumping in. The algos are jumping in on the momentum train and they're riding it. And the problem is they're not going to hodl. Those algos are not going to be with you, saying we hold no matter what. Again, retail kickstarted this. Reddit's done the movement. I do agree that AMC would be in trouble without Reddit. So, you've got to commend those traders for that. But a majority, and people are saying I'm lying, the majority of volume in here, you can tell. I've been a professional trader for a long time. I've run algorithms. This is algorithmic action. There's a lot of algorithmic action. This isn't all just retail. So, Mitch, do you agree with me on this? Because they're calling me a liar in the chat.
That's why I wanted to kind of jump in
here.
here. I mean,
this is just reality. There's a lot of professional traders who are trading this stuff.
Just look how much shares is in the float size. Look how much money you need to rotate this float. And this is not just easy money, guys. We're talking big money.
500 share float. Yeah,
that's not small. That's not small. We're not talking about 100 million, a low float stock that's kind of ripping through the moon. We're talking about a stock that has a lot of dilution and still going up, right? And making offerings still going up. So I think a lot of this has to do with institutionals, algos, definitely making the money. I think one of the things that most people think is that they're apes and that everyone's behind this, but also I think there's a psychology that happened and the institutions understood this, that the retail trader is just all in. And when you're all in on one side, they could just jump in and make the money also. So that's just what I think happened.
Well, how that this is all algorithmic and institutional trading is, look where the biggest shenanigans go on, right? You think in the pre-market and after hours. You think that these
I don't agree with that, Joel. I think it's a lot of retail action in the
after hours too.
Yeah, I think so. I think there's algos after hours. There's algos pre.
No. I bet that's what I meant.
The reason you see the biggest shenanigans is just liquidity is lower. You know, it's just a liquidity issue that there's 90% of traders who are off the board at that time. So that's why you always see the biggest movements in everything pre-market after hours, because there's just not the liquidity there. The real players, the big players, the big money isn't in there. I mean, if you're managing a hedge fund, Joel, you're not getting up at 4 o'clock in the morning to go place an order on AMC. You're only taking a piece of the pie. I mean, if you're on a 2 and 20, if you're on a 2 and 20, you're not getting up, you know, you're already, you know, rich because you're managing, if you're managing $1 billion hedge fund, you're not going in there trying to make an extra 5,000 or 10,000 or 100,000 bucks trading at 4 in the morning. You know, you're not as hungry as that. So, and you're not running your algos. You know, some people are, don't kid yourself. There's a few that are running, but 90% of the algos are off. They're at 4 in the morning. It's just a liquidity issue more than anything. But I do agree with, you know, there's a lot of shenanigans and a lot of other stuff happening there. And to just, you know, think that this is 100% retail driven is not reality. This was, you know, retail sparked. This is still has a big piece of retail driving it, but there is big money that you'll never hear about. Hedge funds, like we think we're blowing up the hedge fund industry. There are some hedge funds making a lot of money on AMC as well. Don't kid yourself.
Yeah, via the stock or via options. I mean, we
via both.
Yeah,
it's not all. But my point to being is, if you're going to say hold the line and we're all on the same team, the problem is 3/4 of your players aren't on your team.
No.
So you got 25%, you know, that's going to hold strong, or maybe 20% is going to hold strong. But when the stock starts going down, there's going to be, you know, some of those people who think are on your team are going to capitulate and say, I can't take it. I don't want to lose my money, because money, you know, still talks in a capitalistic society. But those hedge funds have no loyalty to you at all. And that's the issue of just saying we're going to hold this forever. And that's why in almost all these cases, Tilray did the same thing when it went from 20 to 300. And, you know, and obviously come back down. In almost all cases, these stocks don't stay on the moon. They might go to the moon, but they come back down.
I agree with what Clint just said. Retail is driving the awareness.
Oh, for sure.
Driving the price.
They take advantage of the retail trader.
I'm down with that. I'm down.
The hedge funds do. The hedge funds will, for sure. You think you're giving it, and you're hurting the you know, we're nailing Wall Street here. Wall Street's making a lot of money off of this. I would bet when you look at Citadel and Virtue Financial, who are obviously high frequency trading firms that are market makers, there was already somebody, you know, I forget the analyst that was coming out and saying, but they're expecting a big number from Virtue just because there's so much action in these stocks and they're making spread. And they're just kicking ass and taking names. Like, we know Citadel made a lot of money trading the spread in GME because those spreads were juicy, and they're taking the opposite side of every order. Like, that's what you don't understand.
Boom, boom, boom. Buy, sell, buy,
your orders
sell.
Don't go into the market.
Boom,
it's not,
boom.
you know, they're going to an over-the-counter market maker that's taking the other side of that. So they're just going ping, 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 making spreads, and the spreads are wider, and its stock's going nuts. They're making even more money. So, I mean, you got to consider
with very
that.
little risk.
Well, there is always risk involved. If a market maker gets, you know, in a situation where it goes straight up, like a Bed Bath & Beyond could hurt a market maker. Market makers do very well in shop and slop. They do very well even in trends. It's when you get this vicious, nobody's hitting the bid, everybody's just buying, that they could get hurt. So they could get a few people hurt yesterday. That could happen. But a lot of your market makers are really smart.
I want to bring
when
up,
they start to get full, they start to get
I
out.
wanted to bring something up. You talked about, you know, AMC, you know, and the market. Well, notice here how, you know, AMC it's kind of stabilizing here, right? Still going down, but the fact now the market's going up a little bit, right? You remember we talked about that inverse correlation, and the market was holding up the last couple of days with AMC ripping. You know, today it's a little bit different, but, you know, you were talking about that, and that's why you took the short-term, you know, wager on this is the market going to get hit by this? Now you got AMC going down and the SPOOs are rallying, hit that target right on the nose at 69.50. 41.90. That was a double bottom from Tuesday and Wednesday, and also you got a weekly number there. So I'm going to see what happens, and that's also mid-range on the session. So be hawking 41.90 this morning if we get up
and
there.
I'm taking a lot of heat for what I'm saying. I mean, I'm not calling out Reddit. I'm not calling out anything. I'm just saying there's other participants in here. People are arguing me that it's 100% retail. It's not. So, I mean, this is just uninformed.
Where do retail orders go?
Yeah, it's not. It's just not reality. It's not. It's a misunderstanding of how the markets work. That's all it is. It's unreasonable to think.
100%.
You think the hedge funds just don't touch this stuff? You think they're not getting down and dirty in AMC? I mean, the thing's traded how many volume yesterday?
Oh, God.
So
800
I know
million,
these people are all hating me because they want to believe that's 100% retail driven. I'm not saying you're doing anything wrong. And if you guys want to be apes, go for it, man. Do whatever you got to do. I'm just saying, in all likelihood, the probability of everybody holding the line and this thing going to $1,000 is very low. That's all. And I play probabilities. That's all it is. All the market is a game of probabilities.
You want to cover some other stocks?
You guys want to talk about something else? Maybe.
Maybe.
Thank you, Mitch. Mitch with the save.
I've been thinking the Zoom could possibly come back down, and that the biggest eye on Zoom I have is just because also, it's one of the biggest holdings in ARKK, and I've been focusing on that as kind of our growth indicator. So Zoom looking interesting. It's right there at the top. Can it get above that level? Also, ARKK, kind of the same looking chart.
I was going to mention ARKK because the Kathy stocks, right? Zoom, Teladoc, DocuSign, all those high growth names that were.
They didn't participate.
No, not at all. Not
at all. They're not. Maybe the short interest isn't high enough. Maybe there's just they're not small price stocks. People are going after the under $10 stocks, a lot of them too, because they can load up on those. Yeah,
things. too high.
And the options are more expensive too on a Zoom and stuff. But Kathy, you think about, this, it was a lot of smaller growth names like Ride and stuff giving a lift. Kathy was down yesterday. ARK was down. There's a sneaky little sell going on in some of the growth names again. So I think you start booking profits in some of the swing names too. I think I'm booking profits in a lot of stuff here today.
When is the last time we talked about Kathy buys?
It's been a couple weeks.
Yeah,
it's been a couple weeks. She's still buying.
She's still buying.
Yeah, she buys.
I know, but it used to be a topic almost in every show.
Yeah,
just,
you're right.
you diversity and looking for the different catalyst in the market. Zoom didn't, it looked like it wanted to move off its earnings report and it didn't. So if you were looking for that to be a catalyst, it really wasn't. Are we trading under 322 yet? Now, folks, keep an eye on 322. You got two lows from the last two sessions, kind of hanging in there. So I don't think they knocked out that 322 buyer yet. But on the upside for an earnings day, no upside in this until you clear 336.40. That wasn't yesterday's high, but that was the high from Friday. Man, these 3-day weekends mess me up. Friday and Tuesday. So.
Right,
they mess me up.
I know
too.
it wasn't.
It feels like Wednesday today, Joel. It doesn't feel like.
I know. It's almost the weekend, though.
Right. Well, a lot of people in chat are fired up one way or the other. That's fine. Love us, hate us. That's okay. Just do me one quick favor and
hit the like button.
Hit the like button. Even if you don't like,
we got a lot of actually
we do
today. It's because I said that it wasn't 100% retail driven. When I said it wasn't 100% retail driven, and that some of the algos aren't going to hold with.
I need a tissue.
I'll take the blame for that one. That was my.
I got
question.
a lot of. Yeah, I know. Mitch, you said in the Mitch actually was the one that started this. He asked that question and kind of was saying the same thing.
Got to get a tissue.
There's some hedge funds in here.
I'll tell you what I have diamond
in there.
I got diamond hands for one thing. My own opinion. I'll tell you that right now.
You want to know what my hands are made of?
Paper.
I have paper hands, and I'm proud of it. That's how I protect my capital, is paper hands.
I got stuff in my portfolio that's longer. I've had longer than half of the age of half of the people in this chat.
Joel has diamond hands.
I know. I mean, come on.
Joel's like got
Joel's the
most diamond
Jesus,
hands
I don't
of everything.
I mean,
even when he wants to sell, he's not allowed to sell. He's not even allowed to sell. He had to rip the sell button off his computer because of Lisa. He wanted to sell Peloton the whole time. He's not allowed to sell. Nobody's got better diamond hands than Lisa, really. But Lisa controls it.
Yeah. I don't know.
Gonna have to buy Lisa some diamonds, man.
Man, I don't know. Got to do something with the cash. I don't know. Maybe.
You know what though? It's true. You got to do something with the cash, though. I don't know. This market is so interesting, though. I mean, you got to go back and just say how interesting is this market that we're in, where we get these dynamics, where you see certain stocks exploding 60% because they have a short interest. I mean, I love learning. And this market is such an environment where you're learning more and more. You're learning that, hey, Reddit is for real. Hey, social media is not going away. They are drivers of price, and they've never been drivers of price. So that is super interesting to me as a trader. And there's new edges and new strategies that evolve from all that stuff. Every day you got to be learning. I'm 22 years in, and I got to adapt. You got to be adapting. If you're just saying, okay, well, this is stupid. This is how I used to trade off CNBC. There'd be like they'd mention a stock and it'd go up 5% on their mention. I'm like, well, that's stupid. And I would just short it and it would come back in. I don't do that now because you know why? They mention the stock and then it gets hyped and then it starts getting caught up on social media and it goes up 5% and ends up going up 20%. So you got to adapt. You can't just randomly short, when the stock's going up because it's going to come back down. So, I mean, this is what the market is. It's all about adaptation. And those who adapt survive. Those who don't adapt die. And this is a market where we've got to adapt. So I have all the respect for Reddit traders, and all the apes out there that are holding. I respect you guys. I really do. I challenge whether you're all going to hold when it really starts to go down, but maybe you are. Maybe it's going to end up at $500. Nobody knows where the stock is going. And nobody knows. And I'm not predicting anything on this show right now. I think 6 months from now it's going to be lower. I think 3 months from now it's going to be lower. I think 3 weeks from now it's going to be lower, but I don't know. This could go and pull a GameStop and go to 100, 150, 200. It could do that. It is possible that it could do that. So I'm not shorting the stock, just saying it's got to come back down. It doesn't have to do anything.
And an argument in favor of the retail crowd is that like GameStop went from 480 to 40, and now
it came back.
It came back, right?
It came down, it came back up. Yep.
Right. Like the GameStop story, we're not even talking about GameStop, but that story hasn't even ended yet, right? Like a lot of people held, and it's worked out for them. Like GameStop didn't come all the way back, but it's come back most of the way, right? From 40 to what? What is that? 2 something?
It's unbelievable. You don't usually see them come back like that. It's very rare for the stock not only to come back once, it came back twice. It came back twice. We went from 400 to 40, then we went up to over 300 again, then we came all the way back down to 100. Do you think it's over this time? Oh no, we're going again 300. They won't let it go.
I mean, bravo.
That cat investor, the I always forget his name, Value Kitty. Anyways,
Roaring Kitty. Come on.
Roaring Kitty. Well, value. He's a value guy. Yeah. So the value investor, Roaring Kitty. I mean, he's been unbelievable on this. He's still holding stock. And you know what? That guy's making a hell of a lot more money than me. So bravo.
Yeah. I mean, if you,
I think somebody said he made $20 million or something on GME.
Well, he made more than that. At one point, he was up to like $50 million. And I mean,
this is impressive.
Yeah, hat tip to him. Hat tip to everyone who
AMC on the comeback trail. Down only $1.10 right now.
Yeah, I don't think the story is completely over here yet. So I don't want to lean to a bullish bet. Joel was trying to talk me into a bullish bet. I can't do it because my fundamental analysis hat is on here, and I can't fathom making a bullish bet on this. But it's not going away. You apes are doing pretty good. I'm going to give you that much. The apes are doing pretty good. I don't even know, what does the ape mean? I don't know what is that means.
What's that mean?
Tell me and Joel, because we're old. And
we're so old.
What does the ape mean?
I remember when the Dow was
creates the community cult-like feeling.
Why are they called apes?
it's a reference to a meme, like everything is, and it's like apes strong together. Yeah, exactly. Like
Grape Ape. Wasn't that a good cartoon?
What?
Grape Ape. Does anybody?
Joel always takes them on a tangent that nobody understands.
Grape Ape. I think that's a cannabis strain.
He's from the 1920s.
Grape Ape.
Like I said, I was around when the Dow was created. No, that was.
You helped create the Dow, didn't you?
I'll tell you something.
Me and Charles. I mean, we were tight.
Most people are forgetting about SPACs in all this.
I have completely forgotten.
What?
There is a new pattern out there, guys.
What is it?
New pattern.
Yeah.
All right.
Look at SoFi. Look at JIH.
Do you think these things are going to eventually start to catch a bit again? Because the SPACs are getting left out
ready,
of this
guys.
I still have 3 or 4. And they're like cash equivalents here right now. They don't move. It's like a treasury bill on these SPACs. They just stay at 10 and they don't move.
Look
when
at
do
SoFi.
They start moving again?
Look at SoFi. Look at that. That's a new
pattern.
was
a new one. Once
That's
they get locked
into
this
pattern. It's a new
I hope
pattern
you're
here.
right. I have 3 or 4 of these SPACs still, and they've just been sitting there.
I'll
dead
tell you
money.
one I have right now.
What do you got?
TSIA. I'm in this one, guys.
Say it again.
TSIA.
What is this one?
So this is going to turn over to Latch. And so the biggest thing that I've been seeing in the new pattern in SPACs that we're looking at is merger votes announcements and actual merger dates actually causing the stock to come back up. And this is usually the change, because prior to this, it was always merger votes, kind of little push, but as soon as that merger vote date hit, it was really right back down. And so one of the things that we're starting to see is they're starting to come up on these announcements and up on the merger votes. I mean, you can look at SoFi. SoFi was really the first one to lead in that pattern. TSIA, kind of more of a laggard, and I'm trying to watch it. But JIH is one that did this one also. That's another SPAC that's been holding. Look at that one. That one hasn't gone to 10.
I want to know who else is long with me in SoFi, baby. Let's go. Team
SoFi, baby.
All the way.
SoFi.
All the way. All right. It is 8:59. Dennis.
Yeah, I'm going to hop, guys.
I made a lot of
hop over.
enemies today.
Don't leave us without a final thought. I want like a final nugget of wisdom.
I want to see what happens at 41.90. That I would love to see it up there. That was a double bottom. I have some weekly numbers there, so it's mid-range on the day. But we didn't get to cover many tickers today, so I'm going to hop over to PreMarketPrep.com and cover more than 3 stocks besides the meme stocks. So,
all right, see you, Joel.
Hey, everyone, have a good day, and we'll see you over at PreMarketPrep.com.
See you, Joel. See you, Dennis. Man, chat was fired up today. All right,
I'm fired up too.
We got to hop because we got the Cannabis Capital Conference happening right now. If you don't know what that is, check this out. All right, so that conference is going to start right now. Actually, I'm going to end this stream, and this stream will redirect straight to that stream. We have opening remarks coming up, and we got 2 whole days of investor presentations, public companies, private companies that are going public, stocks that trade on exchanges, stocks that are on OTC that are going to uplist to the exchanges. If you're into cannabis, the next 2 days are for you. So with that being said, everyone, please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to all of you in our chat, the people that loves us, people that hate us. Without you, we'd be talking to ourselves, and it's a lot less fun. So we appreciate that. On that note, everyone, good luck at the open. I'm going to end this stream now. The Benzinga Cannabis Capital Conference starts right now.